Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, April 1st, April Fool's Day, at about 3:45 p.m. Eastern, just before the markets close. Well, the jobs numbers came out today, and unemployment was a bit weaker than expected, but payroll growth figures for the previous 2 months were revised higher, while average hourly earnings grew again after pausing in February. Altogether, the report was good enough to increase the market's expectations for the Fed to make a 50 basis point rate hike at the May meeting. And we'll see how that turns out. So on that note, let's go on to three charts that will give some information about the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. This is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, to review a little bit, we know that the SPY's last all-time closing high was on January 3rd at $477.71. And when I captured this chart today, the SPY was trading at $451.18. That's about 5% below this prior high. We know that the SPY rolled over from these January highs, plunged through the 20-day, the red line, the 50-day moving average, fell like a stone down to January 24th at about 421, then bounced up to 458. Now this turned out, this 458 right here that we see, this turned out to be, pardon the pun, a pivotal place on this chart as it moved forward. The SPY, it moved up to this 458, and right overhead was the green line coming down. The 50-day moving average is coming down overhead. It can cause resistance, very definitely. So after hitting that 458, not being able to get over the 50-day, the SPY backed off, came back down to its 200-day, then took a running jump at it again. Couldn't do it. Hit this 458 line again right here. It's like, no, not going to happen. And of course, now the 50-day moving average is coming down overhead, and it acted very clearly here as a yet another form of, oh no, you don't resistance. So from there, the S&P backed off. It fell down below the 200-day moving average and came down here to gap down. It gapped down March 8th, I believe it was. It gapped down on March 8th to February 24th, it made a low at 410. That's where I am right here. Okay, made a low at 410. So that was a big gap down. The market rallied right after that. Came back up, hit the 20-day moving average, couldn't go any farther, came back down, retested these lows, almost not quite back down to 415. So now we have here, what I'm looking for as a trader, I'm looking for higher lows. Right here we have a higher low, right here it was retested, but then it broke up from there. So if we wanted to draw a trend line here, a short-term trend line, we could do it like that, and we could see that the SPY rallied back up off this 415 higher than 410, which is a good thing. This is telling you when it comes down to 410, gaps up and then retests again, when any stock or index or whatever it is can make a higher low, that means buyers are coming in to buy it before it retests that last low, and that's obviously a positive signal. So doesn't mean we're out of the woods yet, but does mean there's some hope here for potential market rebound, and so it did. The SPY bounced from there, came back up now, moved up past this resistance level at 440, just kept right on climbing, jumped over the 200-day moving average like it was nothing, jumped over the 20, the 50-day, the 200, like, no problem here, and went back up to this 458, 460 line. Now, remember when I said this is more important than we could tell? It is a pivot. The next one is a pivot at 458. This time price made it up to 460, but that's still within the resistance zone. And then in the last 3 days this week, it had to pull back. It couldn't keep going anymore. I mean, yes, we have inflation. Yes, we have rising interest rates. And yes, of course, the situation in Ukraine is continuing. So, and we're looking at interest rate hikes from the Fed, and very definitely in the future and probably in May. So we're doing pretty well here with all things considered. We will have to see how strong the market can stay in the coming week. So as we start this year's second quarter, right in here, we need the SPY to stay above the 50-day moving average. Be very nice if it could stay above the 200. So let's see what happens here in the next week. Please trade wisely. Our next chart is a daily chart of the Invesco QQQ, symbol QQQ. As you all know, this is the ETF that closely follows our Nasdaq 100 index, very important index in the market, where all of the big momentum stocks reside, the Apples, the Amazon, the Alphabets, the Facebooks, the Netflixes of the world. Now, when I captured this chart today, the QQQ was trading at $359.91. That is about right at the 10% number below its all-time closing high, which was back here on November 19th at 403. So since that all-time high, it couldn't do it at closing high, couldn't do it again, rolled over from this January start here, rolled over, plunged a lot more steeply than the S&P 500 did. It just rolled through that 50 and 20 day, came down pretty darn dramatically, moved on down to the lows here in January at about 335. Then it consolidated here, popped back up to the 200-day moving average. And look how strong these moving averages can be. Tried to stay above it for a day, and then tried again, but could not stay above that 200-day moving average. Notice how neatly and precisely it bumped its head and then fell back down. So the QQQ fell down to lows here at about 318. It gapped down here toward the end of February, gapped down, opened at 318, then rallied back up, similarly to the SPY, but after a steeper fall, rallied back up to about 348, 350, fell back down, and this time the Qs retraced the entire fall down, didn't make a higher low, but at least kept that line at 318, didn't go below it, so the buyers did come in at 318 to prop up the QQQ and send it higher once again. And we can draw a little downtrend line here, and I've already done it. You can see when the downtrend was broken, and and now we are in an uptrend. However, it's moved up very, very quickly. A lot of this may have been short covering as well, because that's what it typically looks like. Again, though, came up to that 200-day moving average, coming in now at 369, and the Qs said, gosh, I'm trying to stay above it, but I can't do it. So it slipped back down for the past 3 days, and again now is trading at 359.91. So we have a double bottom here for sure. Now, what we want to happen is at least we want the QQQ to stay above this 348, 350 line, above the 50-day moving average. You know, there is support here for price at about 354, 355. There's more down here at 352, but fingers crossed for a bullish market. The Qs need to stay above this 348, 350 line. So keep an eye on that in the coming week. And as always, please remember to keep your stops in, especially on high momentum stocks, because they're moving really, really fast these days, both up and down. Okay, our final chart for today is one we haven't looked at in a long time. It's the daily chart of the Invesco Dynamic Biotechnology and Genome ETF, symbol PBE. I'm been kind of looking around here for we'll call them bottom fishing ETFs. And one I think that might be something to keep an eye on here. Again, the Invesco Dynamic Biotechnology and Genome ETF. That's a very long title. We'll just call it the PBE. It has 31 holdings. The top holdings include Incyte, Regeneron, Vertex Pharmaceuticals, Amgen, Biogen, all of those guys. Now, we see a recent high here of the PBE back in September of 2021, and this right here, this came in at about $80. So you see where it was floating back in summer of 2021. Then that was all she wrote for a while. It came down, it consolidated on its 50-day moving average, then gapped down below the 200-day moving average, popped back up over the 250-day and 20-day, and then made a lower low. And of course, a lower low is always something to look out for, because that means buyers are sticking their hands in their pockets and saying, nope, we're not going to buy this again right now. So the PBE started down here in the final quarter of 2021. It tried to rally up into December, couldn't make it over the 50-day moving average, then rolled down again below the 50-day, the 20-day, and came all the way down here in January of 2022, now in the first quarter of 2022. And it came down to the lows at $56.45 right here. Now, this was something where I start to watch a little bit, because I'm seeing a little more volume come into, if you just gaze at this, it's not finely done, but if you gaze at this volume and gaze at this volume, you can see the difference. So it's nothing to trade over and say, oh, well, we're all good here, but it's something to keep in mind. So the PBE came down here, got a little more oversold, bounced up. Now it consolidated here, and then at the end of February, it broke down a few points lower, but it gapped down and rallied back up. So I'm going to forgive that, a gap down and rallied back up. These lows here at about, we'll call it 56, stayed pretty much stable. It hit it 1, 2, 3, 4 times. And if you look at a longer term chart, which I always do, of the PBE, you will see that longer term there is quite a bit of support at 55, 56 on the PBE. So now it formed a triangle like this. It broke out of the triangle in the middle of March. Made a little move up here, moved past this resistance line, moved up to the past resistance here at about 62, 63, consolidated, then gapped up in this past week, and again is it trading today at $63.22. So do remember that biotech companies that make up the PBE, biotechs in general, don't always trade with the market. A lot of times they will trade on their clinical trials and what happens with that. But of course, with an ETF, there's 31 holdings, so you're going to have some going up, some going down. But this still looks like a pretty decent pattern to me for a kind of a conservative bottom fishing play. So if in the coming week the PBE can stay above $60.50, and that's look guys, look for the 20 days crossing the 50-day right here. They are right here. These two moving averages are just above the 60 line. So I want the PBE, and it could pull back here a little bit, definitely, but I want it to stay above the 50-day moving average and the 20-day that are kind of locked together here, 20-day to starting over the 50. So again, if the PBE stays above the, call it $60.50. If you want, call it $60. As long as it stays above that in the coming week, I will add a small amount to my portfolio. with an initial stop here at $59.90. I'm putting it below these moving averages. I think that's fair. Now, if the PBE, if and when it starts up, the next line of resistance is right at this high, and we know it could be pretty strong because it was support at one time, is now resistance at this time. So keeping an eye, if the PBE can come up and close above 66.50, which is this next form of resistance, I will add more shares to my position, and of course by then my stop will be a trailing stop. So you may want to keep an eye on the PBE in the coming week. And now, please know that this is the perfect time to check out my online training programs. These programs include our flagship trader training, 7 Steps to Successful Trading. We also, very popular, is how to swing trade successfully, how to trade the trend for profits, 3 winning setups, that's always a good one, bottom fishing down here, and we have many more. So please know these programs can help you increase your gains quickly and easily, and they are low priced. To see all of my online training programs, simply go to the link on this screen up here, or easier still, just click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.